All right, let's call it about 3 minutes before the closing bell rings. We are off session highs. The NASDAQ is having its, 5 minutes. NASDAQ is having its best day since May 27th, and the Dow is rebounding from its lowest level since December of 2020. We need to tell you, we've mentioned broad-based. All 11 S&P sectors are up right now, and we have a verdant stock market with lots of green arrows on this summer solstice session. And if you perchance have ice cream on your mind, our countdown closer joins us now with his stock scoops, including one that actually has a little bit of chocolate flavoring. Let's bring in Summit Global Investment CEO and CIO David Harden. David, what do you make of this rally that we are looking at that's still pretty darn powerful in these final few minutes of trade? Flash in the pan or a short-term bottom and the real upturn?
Well, enjoy it while you can. It's a great time to enjoy it. It's, summer's definitely started, so enjoy it. I don't think it will last.
Okay. I know you have a base case that the recession is coming in the first quarter of, 2023, but it could show up as early as 2022 in the fourth quarter. What are your numbers that you're looking at here, and what stocks do you say buy now to benefit at least, or at least be safe?
Well, as we all know, gas prices are not going down, and we've seen that in airline prices, at the pump, et cetera. So for me, I think you need to have some exposure to energy, and I think two of the best are ExxonMobil is doing great. I mean, it has nearly a 4% yield. That's a great yield in today's environment still, and it's only a 15 PE, so it's still relatively cheap. And energy, I think, is doing well. Another one, Chevron. So both of those companies are in a very similar position, and I think that that's a position that you must hold throughout this summer.
Yeah, and your scoops, those two plus McKesson and Hershey, these are all names that feel like gotta have. I mean, certainly with Hershey, you gotta have Hershey chocolate.
Absolutely. Well, let's face it, if we're going to go into a recession, I've been telling people we're probably going to eat more chocolate. And all of these companies do really, really well with a strong dollar as well. So with interest rates rising and the Fed having to raise rates probably another 75 basis points in July, let's face it, you want to have your money invested in very quality, high convicted earnings type of companies, and this is what these companies do, is they make money in markets like today.
Well, which ones don't? I mean, if you could throw out some that you say they don't fit into these parameters, stay away.
Well, I think there's some that anybody that's very dependent upon exporters because of the strong U.S. dollar. And so you got to be very, very careful that IBM has to translate a lot of revenue into U.S. dollars. Remember, energy, commodities are all priced in USD. So none of that has to happen there. But IBM, a lot of their revenue come from overseas. You want to be really, really careful there. And then some of the ones that really did well during the pandemic and how we treated things are over. You see a lot of workforces wanting to come back to work. So the revenue from Zoom and other things, I think those are things you want to stay away from. So I'd be a seller of Zoom, a seller of IBM, and then look for things where government and governance is not working, or where there's lack of transparency there. You want to be really, really careful of downside risk. You talked about Sprint earlier today. What if one of those offers or both of those offers were withdrawn? To me, I would be a seller of a Sprint at these prices and take your profits while you have them.
Well, what risks do you really see out there? Any flashing red lights when it comes to liquidity or anything that we saw the likes of which back in 2008 really brought the markets down?
Well, I think the risk is that I think we're too eager here. There's still some FOMO in the market about wanting it to go up. And the reality is you look at the VIX, we really haven't flushed it out yet. So this capitulation, maybe we felt a little of that about a week ago on Monday, but other than that, there really hasn't been this capitulation. The VIX has not even got close to 40 yet. So I would really think that you would see some more volatility in the coming days. And the risk is still, I think, that the Fed gets it wrong. They're in the driver's seat, but they're way behind the curve here. So we have high inflation. We have to deal with inflation, and the Fed has to deal with that. And so mortgage rates going up, that's risk. More homes on the market, we've seen that. We've seen layoffs across the board in all the mortgage space. So already we're seeing some cracks. We hope it doesn't go there, but that's the risk, is that we actually see a recession.
Gotcha.
By first quarter next year.
Well, listen, there have been 12 since 1945. They happen. David Harden, great to have you.